The interest rate pause in April has been positive for our housing market, and in today's Property Insider video, Dr. Andrew Wilson gives us a sneak peek at what's happening to property prices in April before his end of month results. Spend quite a bit of time talking about the changes to the Reserve Bank and what that may mean for you and our property markets. If you want to keep up to date with what's happening to our markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Australian property investors and homeowners have become accustomed to the dreaded RBA meetings on the first Tuesday of each month. They're waiting to hear the announcement about interest rates and what it means to their hip pockets. Well, a review of the Reserve Bank made 51 suggestions, including that the new board only meets 8 times a year to make a decision about official interest rates. But there's a catch. The change would mean that official interest rates would be moving less frequently, but of course that could also mean that the changes could be larger. So to discuss some of the other recommended changes to the Reserve Bank and their implications, as well as getting an update on how our housing markets are tracking for the month, I'm looking forward to my weekly chat with Australia's leading independent housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yes, good day, Michael. And it was a bit of a shock, wasn't it, though, that announcement that I think we've been sort of pre-prepared, but certainly that was a comprehensive review of the changes or a review of the RBA and the proposals that have been put forward. I'm interested to see how many of these proposals are actually enacted and when they're enacted. I'm a little cynical about the whole process. I'm not so sure, even though we've to some degree railed against the Reserve Bank and some of its decisions, really over the past 10 years. The big picture is really they've been moving to a very similar degree as other central banks are. And a lot of these changes, to my mind, are just window dressing to a large degree. I'm not sure they're going to change the fundamental issue, and that is that standard economic dogma and policies are not responding as they should to the broader issues with macroeconomics. And I'm not sure how changing the structure, the reporting nature, and the other bits and pieces that have been proposed will actually change that fundamental issue. And that's just that monetary policy hasn't worked now since really the GFC. And that's because things change and society changes, and we shouldn't expect the tenets of economics not to change as well. If I could say it a bit tongue-in-cheek, is it a little bit like shifting the deck chairs on the Titanic, Michael? I'm not sure.
Well, the Reserve Bank's role is to keep our economy chugging along nicely, not to have unemployment too high or too low, to control that with interest rates. And they're trying to keep the inflation target to between 2 and 3%. And I was interested to see that still is one of the recommendations, that inflation target should remain. Is it still appropriate in today's?
I think we have to have a target, Michael. We can't be, if we have a fluid environment, then that produces the capacity for margins to be exploited in terms of changing from period to period the actual target. If we remember back, and I think the target's an interesting point of discussion, if we remember back prior to COVID and policymakers, the media, etc., all have very short memories. There was talk prior to COVID when we were in the opposite environment, whereby we had an underperforming economy, and despite sharp cuts to interest rates, we couldn't get it off the ground. So there was the solution was coming out of the particularly a lot of financial journalists who I think we should ignore largely, but that we should change the target then. It should actually be different then. It should be lower when we were struggling to find inflation. Now, when we're struggling to get rid of inflation, we're saying, well, maybe the target should be higher. And that makes my point, I think, that circumstances can make this even more problematic if we have a shifting sense of what the actual target is. But these things are not easy. It's a struggle for all central banks at the moment. I'm not sure that we will see with these proposals any real significant change. In fact, a lot of the wording for these proposals is really had me scratching my head to some degree. To me, as I said, it sounds a lot like window dressing, and it's not going to really address the fundamental issue, which is just the movement away from economic dogma in terms of its real-time effectiveness on economic outcomes.
Well, I think many people are suggesting the RBA is probably going to end up with very similar monetary policy decisions. But there
Yes.
are two ways that we can control our economy. One is monetary and the other is fiscal. So a lot of the responsibility still falls on the Treasury and the budget.
Look, this is the problem, Michael. We have high inflation because we created too much demand. We had to create too much demand because during COVID, we were concerned that our economies and our societies would collapse. We were in certainly completely uncharted waters. So we stimulated our economy, we created a lot of demand, and that, of course, pushed up prices. Now we have to get rid of all that demand. If you understand, we have to now move the other way. Now that entails pain. All the fun we had spending those stimulus packages, we've got to pay the price for that now. Now, the question is whether we're prepared for that pain politically. And this is another issue, is that governments, if they get involved, they obviously know that if that pain creates, as it likely would, high levels of unemployment, that jeopardises their position, their roles, because people will vote out governments that create high levels of unemployment. And yet we have to really bite the bullet and offset all those high levels of demand by reducing demand. And that means pain, and that means likely higher unemployment. Now, whether that comes through higher interest rates or higher taxes or whatever, the point is that to control inflation, if that's what our target is, we have to create pain, regardless of the mechanism. And that is obviously politically not appropriate. And as I said, perhaps this is just a way of political sphere showing us, well, we're doing something, given the issues and the problems that we've had with monetary policy over the recent past.
So, Andrew, any other thoughts about the review?
Main point, I guess, that was given a lot of air was that the panel would be made up of monetary policy experts. I think we've already seen that with the announcement of the new board members by the Labor Party, that we're already starting to see, given the profiles of those new members, that there is still that ideological bias in terms of who we put on the board and who these monetary policy experts are.
One of the new board members they're recommending is going to be a member of the ACTU. So that's interesting, isn't it?
It's interesting, but not a surprise, Michael. It's just the left side of politics turn to hold the rudder, and they're going to infect it perhaps with those who are sympathetic to that type of ideology. Now, perhaps they are, perhaps they aren't. But the point is that, as long as we have a non-objective sense about who is on the Reserve Bank board and who these monetary policy experts are, it'll only create even more confusion and certainly fertile ground for issues going forward in terms of questioning outcomes. And as I said, I think this is all a lot of nonsense.
It's almost the end of the month, and we look forward to seeing the My Housing Market monthly housing figures. But we know that consumer confidence and buyer confidence was increased after the Reserve Bank paused interest rates in April. It was positive for our housing market. So let's have a sneak peek at what's happening currently around Australia's house prices, and we'll go into much more detail at the end of the month, Andrew.
Yes, Michael, it is interesting. We're now, of course, just about at the end of April. We've got a quick snapshot here of where we've tracked mid-month. We will have our full set coming through in the next week. Of course, My Housing Market has been right on the money in terms of changes to house prices. We were first with the news that the national house price cycle had bottomed out, and that has continued. I think it's interesting, just moving at the last point from the RBA, was that in the latest minutes, the RBA has actually put its hand up again, admitting that it got it wrong on house prices. And we have discussed this previously, Michael. I think one of the Reserve Bank's biggest problems has been that it has been a little bit too focused on housing market activity, and that focus in terms of its view of the housing market has been wrong. And it's been wrong because the Reserve Bank has always predicted higher house price falls and longer house price declines. And once again, they've admitted in their minutes that it was possible now that house prices would stabilise earlier than previously expected by them, and at a level above the previous forecast trough. So that's clearly the case if we look back on the predictions made by the Reserve Bank, which were significantly wrong compared to what we're seeing now. And of course, that has worked its way into monetary policy. not just in the current cycle, but in previous cycles. But I think it was also interesting that their excuse for missing out on on the housing market outcomes was that the stronger fundamentals in their mind, which include population growth and nominal incomes, had offset higher interest rates, the higher cost of credit. Well, I don't know how they can get away with that, because we've been quite clear for the last 2 years that the resumption of migration, which has been a clear driver of higher house prices, would occur. We've known the volume of new migrants that were going to come in, so there should be no surprises there. And nominal incomes, wages growth, has actually been lower than what the Reserve Bank has forecast. I don't think they can get away with using those two factors, population growth and higher incomes, as being an excuse for them getting it wrong on house prices. But as you said, they now have no question that house prices are rising again. The early data from April, mid-April data, shows national house prices up again over the month. That will be the third consecutive increase in national house prices. And when we look at the capital city, the major capital city breakdowns, we'll look at all the capitals with our full month report coming up. The major capitals all recorded higher house prices over the month. Sydney and Melbourne and Brisbane are still lower over the year, but certainly tracking higher now over the month. Similar result for national unit prices, Michael, again up over the third consecutive month. And again, all capital cities have recorded, major capitals, higher unit prices over the month as well. Interesting to see that Brisbane and Adelaide are still significantly higher than where they were a year ago. So that rate pause over April, I think, has been a positive for house price outcomes over the month. And I think that we have clearly momentum in our markets at the moment, Michael. And there's now a growing sense that with prices still in some of the major capitals lower than where they were a year ago, but rising over the past few months, that now's the time to get into the market if you're looking to buy at those discounted values compared to a year ago.
I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice, because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Well, April's a distracted month for our housing market, school holidays, Easter, but the auction markets resumed over the weekend, again, not with strong volumes because there's school holidays around, but again, they were very firm, weren't they? There's depth in the market, there's multiple buyers out there, and that's another good sign for the future of our housing markets.
Yes, Michael, April's always an up and down sort of month because we do have holidays. Depends when Easter is set, of course, the impact, but we really need to wait until May to get that all behind us. Of course, we have the Anzac Day distractions with many taking a long weekend, and that means that agents have avoided auctions to some degree over the second last weekend of April. But despite lower auction numbers, those clearance rates remain strong and are certainly consolidating above the results of the same time last year, Michael. And we know when we look at the historical data that clearance rates are a very positive indicator of where house prices are moving up or down. And that's why we look at them very carefully every weekend. Last weekend, auction numbers down in all capital city markets. As I said, that holiday distraction with the Anzac Day notional long weekend sidelining agents over the period. But nonetheless, we still had some very positive clearance rates. Clearance rates are now, we're expecting them to be around that 70% plus mark, Michael. And of course, that really does signal clearly an emerging sellers market where we have strong competition for property, which is good news for sellers. And that's why we're seeing higher prices. No surprise there. And as I said, we're now starting to see when we compare auction clearance rates to date over the month with the same period last year, Michael. In Melbourne and Sydney, they're now actually tracking higher, and similarly, Brisbane is also similar to a year ago, with Adelaide still strong above 80% where it was in April last year. And Canberra, the only real underperformer, where auction clearance rates, although a little higher over April so far, are still below where they were a year ago. And those auction clearance rates are available every Saturday night on my LinkedIn site, Doc Andrew Wilson, and the full report is available each Sunday morning. Also look out for that. So a very interesting week, Michael, in terms of, I guess, the future for the Reserve Bank. Doesn't get much easier for them because next week we have another meeting coming up. I would be very surprised if we don't get another interest rate increase, but we will see. And by another, I don't mean another because we had a pause over April. It's been a very interesting week in terms of the policy position for the Reserve Bank and monetary policy, how it situates itself. But I think everybody should be aware that these issues the Reserve Bank has faced, by and large, aren't really any different to what other central banks are facing as well. And really, governments shouldn't get too involved in this disrupting what is a very delicate but a very important part of our economic policy making.
Well, that's a great roundup of what happened this week. I look forward to catching up with you a little bit earlier than normal. At the end of the month on Friday, we'll be releasing the My Housing Market data for the month, which will give us a good indication of what's happening all around Australia. Catch up with you then, Andrew.
Yeah, thanks, Michael. I'm looking forward to that.